What's up, everybody? It's your boy G. Today's video is gonna be on what is the difference between micro and mini. And you've probably heard about it before when it comes to trading. Um, the biggest difference is micro is the smaller pair and mini is a bigger pair when it comes to trading. So every pair, like for example, the Nasdaq. The Nasdaq has a micro and mini pair. The S&P 500 has a micro and mini pair. Crude oil, gold, silver, any type of futures pair you can think of has two different pairs of micro and mini, which mini is the bigger pair and micro is the smaller pair. A mini contract is the regular contract for futures. It's a larger contract size, so that means when you're in the trade, you can have bigger profits, and also that means when you're in the trade, you can have a low profit or a bigger loss, as I would say too. And when it comes to micros is the same, but it's a 1/10 of the size of a mini contract. It follows the exact same pattern as the mini. It's really the same thing. It's just the size of the lots when it comes down to it. And so when it comes down to mini and micro, the chart or the market moves in pips and ticks. So when it's on the mini pair, every tick for mini is $5 per tick, and that's off of one lot. So when you're on the mini Nasdaq, which is regular NQ, for example, I'll pull it up on the chart. When you come here and you type in NQ, this is mini, this is micro. So when we click on mini here, every time we get in the trade, the market moves in ticks. So every tick that the market is moving, it is moving $5 per tick. And when you're on micro NQ, and that's off of one lot. And when you're on micro NQ, every tick, it is worth 0.50. So really 50 cents per tick when you're on regular. And that's also when you're in a one lot. And so that's mainly the difference between them. It just helps you protect capital when you don't have a large account. So when you have a small account with not a lot of money in it, you need to be trading micro. And when you have a bigger account with thousands in it, you can be trading mini. Because if you're trading mini with a small account, you can easily blow your account if you're not on the right side of the market. And it's just not smart to, because you shouldn't be over leveraging your account anyway. So that's mainly the difference between mini and micro. My suggestion would be, if you're trading a small account, you need to be on the micro pair. And if you're trading a larger account, you can be on the mini pair. But eventually it all equivalates to the same thing though at the end of the day. So if you trade micro, let's say you want to get in a one lot on regular NQ, which, like I said, that is $5 per tick. The equivalent to that on micro is a 10 lot. So if I refresh my page and I want to get in a $5 per tick on micro, getting in a 10 lot on this is equivalent to getting in a one lot on mini. So there's really, you can still trade a mini size contract on micro, but it's just takes time. You just have to pick a bigger lot size, which will be 10. So a 10 lot on micro Nasdaq is the same thing as a one lot on mini. So as you're growing your account, that's when you grow your lot size. And yeah, that's really it on that. So if you don't have a large account, you need to be sticking to micro. And if you have a larger account with a lot of money, a lot of buffer in it, then you can start moving towards that $10 lot, because the market moves fast, especially when it's very volatile, and that can really hurt you in a bad way if you're not on the right side of the market.